Welcome to the Market Huddle with Patrick the Content Machine Serezna and Kevin the Macro Tourist Muir. So grab a drink, get comfortable, and get ready for a deep dive into the markets. Take it away, guys.
It's episode 60, our last episode of the year. I'm Patrick Serezna.
And I'm Kevin Muir. This week, we're taking a break from our regular format to welcome a special guest. Instead of conducting our regular market interview, we're going to dig a little deeper to get to know him and understand how he comes about formulating his market views. It's our pleasure to welcome the author of the immensely popular Forest for the Trees newsletter, Luke Gromen.
How you doing, Luke?
Doing great. How are you guys doing today?
Oh, pretty good. But before we get into the interview, I'm going to ask Lena to tell us a little bit about our beer sponsor today. Lena, hop on here.
Hi.
Hey.
So
who's the sponsor this week?
Sponsor this week is Hop City Brewing Company's Barking Squirrel Amber Lager.
All right. Anything that we're about to get a surprise here from this?
So from them, it says, our multi-award winning flagship brew, Barking Squirrel, has a distinct burnt orange color and noble hop aroma. This amber lager is highly drinkable, a superbly smooth balancing act of hop bitterness and roasted caramel malt sweetness.
Nice. All right, let's give it a try. Actually, that's nice. I like it.
Oh,
I like
Patrick,
it.
You always like the ones
It's a
I
good
don't like.
holiday special.
Gosh.
Luke,
I think you're having a beer with us too,
Yeah.
and you're in America, so we can't send you one of our Canadian beers because there's all sorts of problems getting beers over the border. But what are you drinking? You have something even more appropriate for the occasion.
I do. In honor of Cleveland here, I have Great Lakes Christmas Ale, which is affectionately known by some in Cleveland as Christmas Jail. It is a very nice Christmas ale. Some enjoy it with cinnamon rimmed glass, which brings out some of the cinnamon and honey flavor in it. I will not have that because I would just end up with cinnamon all over myself. So, cheers.
Cheers. All right. So let's get to it.
Okay. Yeah, so Luke, let's go back to the beginning. Why don't you tell us a little bit about what you studied at university and what your first job was out of school?
Sure. So I went to the University of Cincinnati, and at the time it was one of the top 5 or 10 architecture schools in the country, and I was going to be an architect. So I went to the Design, Architecture, Art, and Planning college at the University of Cincinnati, and after about a quarter and a half of that, I realized I did not want to be an architect for the rest of my life. And so it's like what John Lennon says, like, life's what happens while you're busy making other plans. Or at any rate, I knew when I went that they also had very good engineering and business programs. And so I happened to be walking as I was trying to figure out what I wanted to do with the rest of my life. I walked by a billboard and saw a sign for an AT&T investment challenge where you would manage a $500,000 fictional portfolio. And that I looked at that sign, and it was one of those aha moments where I just said, I want to be involved with that for the rest of my life. So I enrolled in the business college and majored in finance and accounting. And Cincinnati has they were actually almost positive they were the inventor, I guess, if you will, of co-op programs. So they have a program where you can go to school for one quarter and then go work for another quarter, and you alternate work and school every other quarter. And so I participated in that program. And so my first job in co-op was with an old line Cleveland money management firm called Ralston and Company, and they had a small sell side business attached to it. And so I started off on the investment research side, helping several different analysts in doing drugstore research and industrials research, and so it was an entry level analyst position, and so that was my first job, and that continued during school. It's actually a pretty funny story of how that developed. So I went back for my second co-op quarter 6 months later to find that the family that owned the business, the research business, wanted to focus on the money management side. And so they were trying to sell the research business to McDonald and Company, which was at the time here in Cleveland. That deal fell through, and they ended up just closing the business down one Friday. And so it was sort of a very quick, meeting at lunch. Hey, we're closing this business. Everyone's got to get out. And so there was sort of everyone was running around with their hair on fire. And since I was, a young guy with, I was going back to school no matter what, making $5 an hour or something. So I figured I would try to find myself a little leverage to sort of move on to whatever, next iteration, because I got the sense a number of these people that were losing their jobs were going to try to start something new. So I went into the file cabinets and I pulled 2 of every single report that they had done for the last 2 years. And I took them out to my car and I went to the director of research as he's pulling his stuff together to get out of there. And I said, hey, I got 2 of every copy of every report you guys have done for the last 2 years. When you need them, give me a call. I'd be happy to bring them out there. And, I'd love to keep working for you because I think you guys might do something interesting. And sure enough, they very much did something interesting. They formed a company called Midwest Research, which became a very well-known regional brokerage firm, a real pioneer in bottoms-up, fundamental, survey-based, and channel check research. And so I literally got in at the ground floor with those guys because 2 weeks later I was sitting on a floor of temporary office space outside of Cleveland, licking envelopes to, stuffing them full of letters, telling clients that we had formed this new firm. They hired me on full time as a sales junior salesperson after I graduated, and that's how it all started.
Luke, that's a great story, and it just goes to show you that you were obviously very industrious even as a young fellow. Like to have the wherewithal to grab 2 of every report, it was ingenious.
Yeah, it was it was one of those things where it was just a moment of clarity, I guess, and just understanding. All right, well, they're trying to figure out much more important things, right? They had mortgage payments and kids and tuition, et cetera, and I was going back to school and had to figure out, okay, well, I wasn't going to have as many dollars to drink beer in 3 months, but it certainly wasn't like real life problems. So maybe that lent some clarity to say, well, grab some reports and we'll see where this goes.
So, Luke, you have some teenagers and some young adults, I think, and I do as well. You probably know that those moments of clarity happen very infrequently for that age group.
Yeah, I've referred to my boys when they were little. I called them, it was like raising drunk dwarfs, right? Because when they were, boys from age like 2, and at first I thought it would be age 2 to like age 9, they're like drunk dwarfs, right? Because there's sort of everything you said to your buddy in college to, don't get in a fight, stop hitting your brother, the dog is not a small pony, they're crazy. And then you come to realize, Kevin, like you said, that it's actually not 2 to 9, it's like 2 to 38. And maybe it's 2 to 78. I don't know, but they are great fun. I love them dearly, but yeah, they definitely keep you on your toes. And there's definitely a dearth of clear thinking at certain ages.
That's right. So you're at this Midwestern research shop, and you become a salesperson there. And is that still in Cincinnati, or are you moving to New York City?
No, that was in Cleveland.
Cleveland. I'm sorry.
That's okay.
Yeah.
Oh, yeah. So I started full time in sales there in June of '97, and was helping a couple different senior salespeople develop that business because it was literally starting from scratch. And I about 6 months into it, I was doing a lot of prospecting work for the other salespeople and sort of understood where, there was data back then called McLagan data. I don't know if you guys, when in your time on the sell side, have spent time looking at it. But it was an aggregation of the commission data for all the big mutual fund firms, by all the buy side. And so I was doing a lot of work on that for us to help figure out, basically which markets we needed to address. And about 6 months in, I made a proposal to my sales manager I said, hey, why don't you, let me start calling on a couple of these territories where we have nobody right now, and I'll do it under the tutelage of the salespeople we have. I think we had 3 senior salespeople at the time, so I'll do it under their tutelage. I said, and if it works out great for you guys because there's incremental revenue and profit, and it works out, for me because I was on straight commission my whole career, including then, so I was keeping a straight cut of anything I killed. And I said, if it doesn't work out in a year, fire me. Nothing up, nothing in for you guys. It can be a win-win. And they incredibly, they took me up on it. And so at a very young age, I started calling on accounts that I probably wouldn't have been able to call on had I been elsewhere for probably another 10 or 15 years, quite frankly. And so it was one of these lucky breaks. And the guys I was working with were just tremendous. They're a tremendously talented group of people, really motivated, really fun. And we caught the market at just the right time in terms of, the big wave of hedge funds and quite frankly, commissions as well that came with a lot of those hedge funds. The business, Midwest Research, really took off. And it was just a really, really fun period of time.
So now, did they give you New York City, or was it a region, or was it just accounts that weren't covered? How did who were you able to cold call, and how did that go? Walk us through, what was it? A typical big client that you weren't covering that you managed to score.
Yeah, so I called on Texas, Kansas City, St. Louis. I had a couple accounts in New York to start with, but primarily it was Texas, Kansas City, and St. Louis. And so you had this is going back, AIM and Van Kampen, AMCAP. You go to Barrow Hanley in Dallas, and Waddell and Reed and American Century. And it's a bunch of great firms with great people that we simply didn't have a salesperson calling on. And so it was, I was excited to call on them, and we had a great product that was uniquely positioned. And so it was. We were able to build some really great, mutually beneficial relationships with a number of those firms across those regions.
Okay, so at a certain point, you're selling the research, but you eventually turn into the person writing the research. So when did that come, and how did that transition happen?
So early on in Midwest Research, myself and one other gentleman, a partner of mine, began putting together a piece that was called The Herd in the Midwest. And so it was a weekly aggregation of the bottoms-up research insights where we were trying to sort of put them together in some sort of thematic manner. And then I began marrying those with macro and thematic things I had found or thought were interesting from my own readings. And so he and I started sending it out to our customers every Friday, and that thing just took off. Where suddenly other sales guys would kind of come over and say, "Hey, my client just sent me this from you guys or from his buddy, and they want to be added to the list." And so we would edit this piece every Friday and put it together. And I don't know how big the readership got, but it was thousands and thousands across Wall Street. So that was really the first time I started. Transitioning towards more of the writing side of it. And then I guess really started to morph was let me back up there. We did that while at Midwest Research, and then a group of us moved over and formed Cleveland Research Company in 2006, and I reprised that role every Friday, putting together a weekly piece with a colleague or two of mine. And so as into the 2008 crisis, that piece when was along with the firm's research, it really helped customers of our firm, clients of our firm, position well for what transpired. And so post 2008, as the world became more macro and central bank driven, I really began doing more of the writing of just one-off pieces of putting things together from a macro perspective, simply because I felt like that seemed to be what was driving more of the equities that we were following.
Right.
So,
Patrick, 1 second. I just want to ask one more question. So Grant Williams from Things That Make You Go tells a great story of stumbling on your piece, and I think it was on the like on a plane, like someone had left it in the seat or whatever, and then spent a year trying to track you down. So at this point, were you working for the firm still, or were you on your own? And could you tell us that story? I'd love to hear kind of your perspective of it.
Absolutely, yeah. So, it is a great story. So, no, I was on my own at that point. So, I left Cleveland Research Company in early 14 and hung out my own shingle as FFTT. And basically, from 2009 to 13, I was doing more and more macro and central bank writing, in my seat at Cleveland Research Company. Got to the end of 2013 and said, hey, I want to do this macro thematic work full time. Went to my partners. We talked about it. And I said, my one caveat, they said, we'd love to have you occupy that seat for us. We'll create a seat. I said, my one key caveat is I want complete creative control to write whatever I want to write, because I felt like that was going to be really important. And from a marketing standpoint, they sort of had a difficult time figuring out how to position that within what they were known for, which is very deep, bottoms up, deep in the weeds, channel check type individual security research. And so we agreed to part ways amicably. I still talk to a lot of those guys frequently, and I hung out my own shingle as FFTT in 2014. So fast forward, we began writing pieces weekly. Fast forward to 2016, and we wrote a piece in April of 2016. Was the piece that Grant found, and so it was. I was writing later that year, probably November 2016, and I get an email from Grant Williams, and just out of the blue, and so I read it, of course, and it said basically, hey Luke, and I don't know if you know who I am, but I found this report, and it's talking about gold and oil in China, and I been looking for the author of the report for 6 months, and I haven't been able to find them. He said I literally he was getting on a plane, sitting down and put his laptop in the seat back pocket in front of him, and there was some crinkled up report that wouldn't let him put it in there. So he takes the report out, it's about to throw it away, and he sees something about gold and China and oil and starts reading it, and he really likes it. But whoever had stuffed the report there had taken the sheets that had my contact information on it. So he sort of had just a part of the report and spent the next 6 months trying to find me. And then finally he mentioned it to somebody who said, hey, you should check and see if it was written by me. And so he said, if you're the guy I'm looking for, that'd be great. But if not, I sorry to have bothered you. And knowing, having read some of Grant's stuff in the past, and knowing, what a good sense of humor he has, I just replied back, I'm the droid you're looking for. And he said, "Oh, awesome. Excellent. We hit it off." He said, if you're ever in New York, I'm in New York for now." And I think he was still based in Singapore. I don't think he'd moved to the Caymans at that point. But he said, "I'm gonna be in New York for the next, week. I'd love to grab dinner with you." And as it turned out, I was going to be in New York like 2 days later. So we went out to dinner and hit it off. And he is, I always tell people he's as tremendous as he seems every time you see him in his appearances, and when you hear him on podcasts, etc. He's more tremendous in person. He's just a really tremendous guy, brilliant, humble, gracious, and really fun to be around.
Oh, you know what? I have to agree with you. I had the opportunity to be on a panel with him at the Silver and Gold Summit in San Francisco, and super nice guy, great personality. But Luke, I wanted to move on and ask you just a little question. I mean, so you broke off on your own, and you started this business and running your own thing. Did you hit any stumbling blocks along the way? Because I know, like when I was starting my business, there's always these early stumbling blocks. Was it smooth riding for you all along, or was it?
Yeah.
How did it all play out?
Yeah, no, it's a great question. I laugh because it is, I laugh out of empathy because when I started out, my wife and I sat down and we decided we were gonna do this, and the way I approached it was I had basically 3 buckets of capital, and bucket number 1 I fully expected to blow through in building the business, and that was because I didn't want to take any outside investors. I wanted to fund it internally again, so I had complete intellectual independence and freedom to just write what I thought was important to write and say. So bucket one, fully expected to blow through. Bucket two was, if we get into bucket two, too far, then we have to start thinking about, maybe plan B. And bucket three was, okay, if we get to that point, it's, hit the ripcord, sell the house, go figure out something else to do. And it was one of these things where initially we had some very quick early successes, and it felt great for probably the first 4 months, maybe. And then maybe month 5 through 8 or 9, as we went through a period where we're just hemorrhaging cash, and the mortgage is going out every month and the kids' tuition, all this stuff. And that to me was the hardest part. The actual work was easy. It felt fun. It didn't feel hard at all. And, I always enjoy interacting with clients and prospective clients. That was fun. But it was that mental side, I think, that I underestimated, just how hard it was, where you don't know how far it's going to go. And so, or if you're going to get, sort of the cash flow. So late in the first year, we had one client come in, and quite frankly, I had been sending them research. I'd had a couple questions from people, but I didn't realize how much they had enjoyed it and how much it had helped them. And they became a client. And then actually it was, again, one of those really interesting periods when you don't know how things are going to bounce. But that January the following year, my youngest brother, who's 10 years younger than me, died in a hiking accident in Tennessee. And so I'm, burying my brother. I've got 2 reports I got to get out that week in between the funeral, and it just is like overwhelming. And so we get to the next month, and once you sort of go through all that, you just go, you know what, I gotta, it's either, it's put up or shut up time for the business. And so we've been basically sending the research out on a trial basis broadly. And we just said, hey, you've been trialing it, and if you like it, we'd love to have you as a client. And here's where you sign up. And at that point, it was, having been through that challenge, with my brother passing, was sort of made it seem easy, right? After you've been through that, basically saying, putting my cards on the table and saying call. It was like, that's all right. Well, this doesn't work. We're done. But the feedback from clients was far better than even I could have hoped for. And so basically, a couple months later, it was sort of that point in a business where you look around and you say, oh my gosh, I think we're going to make it, which is always a really good thing, right? That was a really good night. Yeah. We went out and we had probably several beers that night, but I'd love to.
That's awesome.
Yeah, it was quite the path.
Yeah.
Okay, well, Luke, so let's talk a little bit about how you've come about with your kind of main vision that you have. And I guess for those who don't know, Luke's had lots of podcasts, and he seems to, it's almost like when you talk about US dollar bears that you almost have to put Luke Gromen in the same sentence, because that's how I think about it. How did this come to be in terms of, like, have you always been bearish? Is it a relatively new thing? Walk us through kind of a little bit, like, how you've come to develop your thesis about what you think is going to happen.
Yeah, so I've not always been bearish. In fact, there was a period of time from 14 to maybe 15 or 16 we were bullish. But to me, the overriding dynamic, we'll say, I think really came in early 2009 when the Fed did what I call the big QE, right, where they went from buying mortgage backs to we're going to buy mortgage backs and we're going to do $1 trillion in treasuries. Right. And that to me was a really a big moment, because that really sort of informed this thought process. And maybe it's the German in me. My grandfather moved, or my great grandfather moved from Germany, so maybe it's the German in me. But I just can't believe that you can have a sustainable economic system where the biggest player prints money out of thin air and gets real stuff for it. Like, that's not that's not a sustainable system if you're on the other side of that. And I say that simply, that's not a system I'd work for. That does, you can make that make sense in the teeth of a crisis, but you can't have that kind of a system. It's never worked ever, ever, ever. As I said with Outcast, right? Forever, forever, ever, forever, ever. Yeah, forever, ever. It's never worked in the long run. And so that, I think, is ultimately, the dynamic of just understanding, like, okay, that happened, and that was just so far off the reservation. And at the same time that was happening, you had what was, call it the peak oil or peak cheap oil discussion. And for me, the peak cheap oil, I think, is that's where, as I dug into it, I wasn't so sure the issue was peak oil. At first, I thought it was peak oil. The more I dug into it, peak cheap oil, I think, is the right way to phrase it, which is to say, if it's going to cost more and more to find the marginal barrel, which is clearly proven the case we've seen with shale, then you can't have a system where one nation basically prints money out of thin air and gets 10 to 12% of an ever increasing commodity, ever more costly commodity for free every day, which was what the petrodollar system sort of granted to the U.S. It basically, if oil was going to get more and more expensive while the U.S. was printing all this, that system couldn't work. And that was sort of the biggest fundamental dynamic where you go, okay, well, if that doesn't work, then you start looking at each individual party's interests and what their motivations would be and what they might do to try to get out of that or change that. And that, leads to the tree with a whole bunch of different branches of possible outcomes. But that was really the big overriding, the two things is the U.S. sort of doing this off the reservation. We're just going to print, we're going to print $1 trillion and buy treasuries. And then, in the context of, this peak cheap oil dynamic where, the marginal barrel of energy, which was effectively backing that dollar, kept getting more and more expensive.
So, Luke, I find that sometimes when you come up with a theory like that and you kind of put it out there, you get people reaching out to you and telling you things that you don't actually know, like they help you along with your theory. Have you had experiences like that where all of a sudden you've kind of done this and then all of a sudden it says, hey, did you think about this? And all of a sudden you start, it snowballs on itself?
The short answer is yes. And that's been one of probably the most rewarding things about doing this, right? When I started FFTT, I thought that putting the pieces together in a unique manner, as I seem to have, as my colleagues told me I had an ability to do, as I felt like I had an ability to do that, sort of I had something to say, but I wasn't sure what the audience was for it.
Right.
And it's been really rewarding and fun, the number of conversations that I've been able to be part of, and the number of people that have either proactively reached out and become clients, become friends, where it's exactly what you just said, right? It's, hey, did you think about this way? Or, hey, you're wrong on this, but boy, you're dead on here and no one's thinking of it that way. And it's just been, for someone who's intellectually curious, as I am, it's like candy for your brain. It's just been so fun.
That's awesome.
All right. So Luke, I want to ask you. So, human nature has a stereotype people in position and their positions. Like, for instance, Brent Johnson, milkshake. Everyone knows what they're going to get there. We do this, right? And so, when you make these bold market calls, so what do you think is the most commonly misunderstood point about your position? Like, what is it that when people stereotype the view about your thesis, what do they misunderstand about it?
I think they most misunderstand that I am somehow anti-American or pro-Chinese. I get that a lot. The other thing I think I get is simply because our research is very multifaceted. And because what's happening is so multi, there is just you just can't really look at anything on sort of a single or even a two-dimensional analyses. Things have gotten so complex, as I think sometimes people will, if X, then Y, in terms of what we're trying to say. And a lot of times it's, what we really try to do is say, hey, I've got fact A, I've got fact B, I've got fact C, and there's a range of outcomes that can happen depending on variety of different dynamics that then feed into that. And so I think a lot of people that know me just from Twitter would say, oh well, he's this or he's that. And I think if you talk to people that subscribe to our research or clients that we've talked to for a long time, I think they would tell you that we're much more we're very, very in depth, and we do have very strong stances when the data support, but that it's oftentimes a lot more nuanced or flexible depending on what happens, right? When facts change, I change my mind. What do you do, sir? Right, as Keen said. So that's probably how I would answer that.
So, Luke, I completely agree. I'm shocked at the number of people that when I make a comment, like I think, for example, let's just say, for example, that you got bullish on the Chinese stock market. For whatever reason, you think that they're going to print money and it's going to cause a rally in it, that somehow there's a moral kind of part of you that you're pro-Chinese, or if you're negative on America or negative on Canada, that this somehow means that that's how you want it to be. And the reality is that you're just trying to call it as it is. You're just trying to make a call on the market. And if the market's headed that way, why would you let your politics or where you want it to go affect your call about where it will go? And I say this all the time. We need to deal in what will be, not what ought to be. And I think too many people confuse the two.
I think that's exactly right. That's like I said, ultimately why when we started FFTT, I didn't take any outside money, and why I wanted to have complete creative control to write whatever I wanted to write, which is for exactly that reason. I need to be able. I've been in seats where I can't say what I was seeing, and I didn't like that. It just is. It's not how I'm wired.
I hear you. So, Luke, let's talk about a little bit about the changes that you've seen in the industry over the last couple of decades, and what would you say is the biggest kind of difference between when you joined and you kind of were that young, fresh-faced guy grabbing a couple of reports and getting a job versus today? Like, how has the industry changed, and is it for the better or the worse?
I always say to people, it's change is just change, right? It's what's chaos for this, what's chaos, or what's normal for the spider is chaos for the fly, right? So
that's a great line. Yeah.
So, what's changed? I mean, gosh, I remember one of my early duties at Midwest when I was a junior salesperson, having just started out in the late 90s, mid 90s, was putting together the daily email for one of the biggest hedge funds in the country, right? So think about that. That was, we were still going from voicemail to, wow, I get to do the email. And it was the only email. Before that, one of my jobs was, staying until 7 o'clock at night, making sure all the faxes went out to clients in Boston or New York or what have you. So you've gone from, all very heavy phones. I mean, one of my big things was I always liked to make 30 calls, outbound calls, before lunchtime when I was on the sales desk. It was just a discipline I had. If I was in the office, I had 30 calls before lunchtime. I tried to get 50 a day, every day. And that was, that faded over the course of my career just on the sales side, where it went from, heavily calls and a couple emails to heavily emails and, oh my gosh, a phone call. And then I think too, I remember in the early days, there was much more, early days of my career, it was much more, a greater ability to just sort of go into offices and meet with people. As a sales guy, that was great. you show up in the lobby and you kind of go up there, and they make the mistake of letting you into the waiting room, then you just sort of you're off and running like a toddler, right? Meeting with portfolio managers and analysts, and the traders are usually off, right? Because they don't want you seeing what they're doing. You have to have a specific invitation into a trading room, but talking with analysts and PMs and just talking ideas, which was just part of this. I love talking about what's going on and talking ideas. And later on in my career, it got much more difficult to do that, which it made me sad, simply because that was probably my favorite part, was just talking themes, talking stocks, talking ideas. But gosh, I mean, I could go on and on about changes. I don't know. How about you guys? What have been some of those big changes to your eyes?
Yeah, well, I completely agree, and it like I kind of laugh when you were talking about the faxes. I remember on the trading desk writing out the block list in the morning or at the night. Actually, we wrote it out the night. Like we made this list that we faxed out of all the blocks that we had to go, which I think is just hilarious now that I think about it. And we made up half of it anyways, just to see if we could get anyone to call. But honestly, it might have been 3/4 even. So one of the things that I find, Luke, is that when I'm out there and I write my letter and I get lots of young people phoning me up or sending me emails and asking for advice. And I was wondering what you must get the same thing, or if you don't, let's just imagine some young person comes to you and asks, says, I really want to get into the business. What sort of advice would you give them today?
That's a great question. I would say, to me, focus on creating great content. That's what seems to be the direction things are going to me today. In other words, it's something I've referred to as the iTunesization of research, where, when we first got into the business, when we were kids, right? When we were kids, if there was a new song that came out, you'd go and buy the CD, or you might even buy the cassette. I'm dating myself now, but you buy the cassette, and there's probably 3 songs on the cassette you like, and it cost you $15, and you were happy, and you played the 3 songs, and you fast forwarded through the rest of them, and the rest of them were crap, or the rest of them weren't as good, right? And what I think has happened, I think, is you've gone from, hey, the research is, the CD, and there's the songs that everybody likes vary depending on their overlap and their personal taste, et cetera, et cetera. But people aren't buying the full CD anymore. But if you can put together a good song, you can throw that thing up on iTunes, if you will, and people will buy it. But it also makes it harder to be heard. And so I think, to me, if someone said, hey, I want to be in the business on the sell side, to me, I think the key is great content. And there's a lot of different ways you can create great content, in my view, whether it's based on industry experience and you try to translate that into investing markets, or whether you have a unique way of looking at the world, or whether you're a forensic accountant and you just really like digging into the numbers. Like there's probably as many ways of creating great content as there are people out there. But to me, the key seems to be, trying to create great content with, a view towards helping investors understand something better, and ultimately, towards making money.
Right. So, Luke, let's talk some markets, bud. I'm curious. All right, so now we've got a pretty interesting market. The equity markets are running. Currencies are muddled. The Fed is supposedly on a mid-cycle adjustment. We're going into a new year. What are you watching right now? What are you curious about in terms of what's going to develop here? Is it all about the politics and how things play out with a trade deal? What is it that you're really watching in terms of what January brings?
It's a great question. I think there's a couple things. I mean, to me, I think the trade deal, is the trade deal and the politics, I think, sort of are what they are. I definitely am keeping close eye on both. But to me, the thing I'm watching most is when the narrative starts to shift on what the Fed's doing. And And by that I mean, if you remember, if we go back to last March, Fed funds rates went above IOER, interest on excess reserves.
Yeah.
That wasn't supposed to happen. And stop me when this sounds familiar, it was because of some regulatory issues, and it was temporary, and it was technical, and there was also tax payments. It was quarter end. And as soon as the quarter end ended, and as soon as the tax payments faded, the Fed funds would normalize and go back below IOER.
And it's not QE, by the way.
And it's not QE, yeah. And except they didn't, right? So then the Fed cuts IOER, they cut rates, and so then we still get the repo rate spike in September, and it's temporary, it's technical, it's quarter end, it's tax payment related, and then like 3 weeks later, well, it's gonna be a little bigger. Well, we're actually gonna do not QE at $60 billion a month. Well, and so to me, there's this, it's almost like this the narrative shift. It's like boiling the frog, and so you're starting to see, I think, some people kind of really start to question it, and that to me, as I look into the new year, is when does the narrative start to shift from this is temporary and technical to this is the Fed financing U.S. deficits effectively through the U.S. banking system.
Oh, that's exactly it. All right, so then let me follow that up with this. Now, obviously, the market is coming in a pretty bullish circumstance, and the bonds are coming off a little bit. Interest rates are giving a little pop. What do you think is the biggest potential surprise for 2020 in terms of what the market is? Where you think the next big kind of move is? Is it in currency? Is it in the interest rates? Is it in the equity markets? Where's the big surprise of 2020 coming?
Yeah, I think to me, the big surprise of 2020 is probably that stocks have it right and bonds have it right and FX markets have it wrong. That really? To me is the big surprise. That's what I think is, and that's not to say rates can't keep backing up to a certain extent, but I think, we've seen this chart. We've all seen the chart, right, of the jaws, right, where you see, yields on the floor and stocks at the ceiling, and people say this has to close. And, that's kind of ties back to my earlier point of, there's all these multi-pronged views or facets to things, right? So it's, a lot of times it's as simple as one of those is wrong, but there's a third leg to that stool, and it's currencies. And to me, the big surprise is it's equities have it right, bonds have it right, and the dollar's got it wrong.
So where's the dollar going then in your mind? Okay, obviously we know you're bigger there, but how big of a do you think this is a big move, or what would be a surprise to you? Let me put it this way: if you saw a 10-point move on the Dixie, would that would not be Luke being shocked? What would it take for a move for you to be surprised?
10's a pretty big move, man.
Yeah, I know. I'm just using that because it's the first number that came to mind.
Why do you guys think 10's like what? That's 10%?
Yeah.
So if we ground lower next year 10%, I wouldn't be shocked.
No, but that would still be. I mean, remember we went down 12%, and we went down 12% in 2017, and that was the biggest move in 30 years. So that was that's probably.
Well, the other thing is, Luke, you realize that that a lot of these currencies are actually. Since then have been the tightest ranges that we've ever seen.
Yeah,
I think someone showed me
nothing, right? It's just like nothing.
Yeah, so I thought it was an interesting call when you said the fact that stocks and bonds might have it right, and the currency might be the surprise that nobody's expecting. I still contend that one of these days that Trump's going to figure out that he's actually able to affect the Treasury and instruct them to go in and intervene in the FX market. And I still remember to this day Kyle Bass saying when Trump first took office, and he was talking about what he wanted to do on a trade basis, and he hadn't done anything at this point. But Kyle kind of laughed and said, one of these days he's going to figure out that he's able to do these things, and Lord help us when he figures that out. I still think there's a chance one of these days he's going to figure out that he can tell Mnuchin to go sell dollars. And you can sit there and tell me that when he sells the dollars, he'll eventually run out and the market will be smarter than that. Maybe. But I still contend that if he's out there telling you that he wants the dollar lower and that he's out pounding bids, that it's going to be scary and a lot of fun in terms of to trade. But I don't kind of discount that possibility at all.
Yeah, I mean, he's it's such a wild card. You would never rule it out. And I keep going back to something we highlighted to clients back in, I want to say April, which was there was Lighthizer. Lighthizer had congressional testimony where he was asked, where he said, "Is there a currency component to the trade deal?" He said, "Yes, there's a currency component, and yes, it will be very enforceable." And then he started to go into the details, and he stopped himself and said, I'll go into more on that with you offline. And that was the end of it. And you can find the transcripts. It was on, whatever C-SPAN or whatever, the Washington, channel transcripts are. But it was fascinating to me. And I say all that by way of, to me, I think, and they've hinted about it several times, but it was never as explicit as what Lighthizer said, which was, I think there's a currency component to the deal, and there's a lot of different ways you can structure the deal that would really affect the dollar. I mean, there's not a lot of people. I mean, I read a portion of Ben Stiles' book, The Battle of Bretton Woods, and I didn't realize this till I read it, but Tim Geithner proposed to the Chinese basically surplus caps. I want to say it was back in 2010, which, basically what that would mean is as soon as a Chinese surplus hit a certain level, they had to let the currency appreciate against the dollar. And that is a nod to something that Keynes proposed as part of his Bancor system at Bretton Woods that was turned down in favor of the dollar-centric system. But the point is that there's a lot of different ways that you could structure within language of a trade deal that would accomplish the same thing as what you just described, Kevin, which is get the dollar down, or put it into the system or into a trade deal to get the dollar down. So it's, to me, that does make the trade deal phase one being done, noteworthy. And I've been watching the dollar, quite frankly, see how it trades after, because I don't think you're going to get sort of this grand, satisfying, hey, we just did this. I just think you're going to start seeing it show up in markets. And, the dollar's been a little weaker in the last, month or so, but it's not been, it'll, to me, it'd be interesting if we come into April of next year and you've just sort of had this down 1% to 2% dollar move over a span of several months. And you start to say, okay, we're down 5-6% from the highs. Boy, it looks like it peaked right before the trade deal. That's the kind of thing that, I don't think we're going to know till really after the fact.
Oh, it's true. Like it's amazing. Like I even just look at the yen. I mean, we've been in like one of the tightest ranges. You go to the monthly charts and you look at like 30 years of data. This is like the tightest range that this currency has traded for like almost 3 years. And you feel like something big's going to happen eventually. It can't just stay pinned like this. And the implied vols are so low, something big's going to happen. It's that could be the surprise of 2020, like some big currency move that takes people out of their comfort zone. I'm not as bearish the dollar as you are, but it definitely currency volatility, I think, is definitely one of those big surprises for 2020 that can happen.
Yeah,
Luke,
I think yeah.
Sorry, go ahead, Luke. I'll let you finish.
No, that was all I was going to say. Go ahead.
So I was going to laugh and say Patrick is more a Brent Johnson and I'm more of a Luke Gromen.
Oh, there you go.
That's how we divide up. I'm like, he's a Brent Johnson and I'm a Luke Gromen, because I think ultimately that it just makes things so much easier as the dollar goes down.
My mouth a little bit here.
Yeah.
Oh my God. All right, go for it. Sorry, you were saying, Kev?
So here's a question for you. I'll put you on the spot. Is Trump a genius or just a lunatic?
I think he is the id of American politicians. He does and says a lot of things, and he just does them and says them, and he doesn't care. But if you look at him, they're not that different. It's just it was the iron hand and the velvet glove for the prior, 3 or 4 or 5 or 10 administrations, and he's just sort of out there.
But don't you think he's changed the narrative with China dramatically?
Yes, 100%. He's 100% changed that narrative, and I can't figure out. I mean, it's weird. I wrestle with this. I've been asked this a lot. Is if you would have, I have a hard time ascribing the level of Machiavellianism, if that's a word, to his administration that what I'm about to say requires ascribing. But if you'd have pulled me aside, sort of knowing what I know, having talked to me at length before, and said, Luke, we want you to, come up with a plan so that over 4 years, we knew we wanted to move away from the dollar-centric system over 8 years or 12 years, but we want to turbocharge that. We want to do it in 4 years. And, we want you to come up with a plan to basically compress that time frame from 8 or 12 years to 4 years. And if you'd have come to me sort of knowing what I know and asked me to do that, gosh, there's like, they've checked a lot of the boxes that I would have done. Like, between getting aggressive with China, between super weaponizing the dollar, between blowing a hole in the deficits with the tax cuts, between issuing so much of our treasury bonds at the short end of the curve, all these things it just destabilizes the system in such a tremendous way. And so, like I said, it's wild because I just really have a hard time ascribing that level of Machiavellianism to him. But they've done a lot of things that sort of support what he has said all along, which is I want the dollar down.
All right, Luke, I'm going to ask you a question. We're almost an hour into this. Is there something we didn't ask you that we should have?
Oh, boy.
Is there what's on your mind that you wished I asked you the question?
Golly.
We did that good of a job? I mean, we covered all the bases. I'm impressed, Kev.
Yeah,
we nailed it.
Yeah, you did. You did tremendous. I don't, I don't even, someone.
Poor Luke, you're putting him on the spot. Okay, I'm going to save you, Luke. I'm going to save you about here. Here you go. What's the thing you would tell the Luke Gromen of 20 years ago that you know today that you didn't know then? And it could be anything. It could be about life. It could be about markets, whatever you want.
Golly. It would be... it would be that the world's not going to end. The way there was a period of time in 2008 and 2009 where I was pretty sure it was going to end, and it's not going to end. But the world changes a lot, and I would tell them to always try to stay looking at things in shades of gray, because it's very, very rarely black and white. And the ability to look at the world in shades of gray, I think, is something that comes with age. More, when you're young, you want to have simple explanations and you want things to be black and white, and that's that. And rarely that's the way the world works. I would, tell them to be, always looking forward for the opportunities that are coming out of these big changes, right? There's always, and to be, open to things. So, for example, it seemed very crystal clear to me, like we said, why am I negative? Sort of what's the overriding dynamic of, why I'm negative on the dollar? And you kind of came out of 2008, and you can't have the reserve currency just printing money out of thin air and buying finite commodities when the price of those commodities are structurally rising over time, in the case of energy. And that was, my initial reaction was, well, you want to own gold, because that's going to be, if I'm selling oil, it's getting harder and harder for me to find oil, and the Americans are making it easier and easier to make dollars to pay for my oil, I'm probably going to start moving some of that into gold. And like we've seen that, and the price of gold has moved, of course, to a certain degree. But I would tell him, look for other derivative plays, right? Because quite frankly, if I would have taken that same, even a small percentage of some of what I put in gold at the time, in late 2008, and put it into Bitcoin, I'd have probably a 300-foot yacht, but I'd be broing down with the Winklevosses, but sadly I am not. but I'm in cold Cleveland instead of on a a big yacht in the Caribbean. But no, the point is just keeping that open mind to the next opportunity that is coming, even as it feels like things are sort of getting a little bumpy, where you're sitting today.
Okay, well, that's some great words of wisdom. Hopefully, the Gromen Juniors in your family will listen to that.
We'll see. Whether they listen or not is sort of a day by day. It comes and goes.
It's never as good when it comes from your old man. That's what I know. It's like that Mark Twain line about how I left home at 19 and then I came back at 24 and I was shocked at how much my old man had learned in those 5 years.
That's what I was going to say. My oldest is 18 and I'm just starting to get a little smart, which is nice.
Yeah.
The youngest is 13, and so he's just going into dad is the dumbest guy on the planet, which is sort of a moment of silence, unfortunately. But it is what it is.
Tell me when I can expect my wife to think differently about me. That's what I want to know. So, Luke, it's been a pleasure having you aboard here for this holiday special. Why don't you tell people where they can find you, where they can reach out and get your letter or see your letter, and where they can contact you?
Absolutely. So just check out our website, FFTT, Frank Tom LLC.com. And I've got a very active Twitter feed. It's at Luke Gromen, LukeGromen, and you can find our thoughts and there and on the website. So that's the best place to look us up.
For sure. And the people, make sure you follow Luke. He's a must follow. He does periscopes, which I still haven't figured out. You're much more millennial than me, Luke. Do you still do those?
I still do them. It kind of comes and goes in terms of, if I've got if I don't if I have a bunch of media appearances, and I try not to do them at that, I don't want to give people, you guys remember the Jerry Maguire movie, right? I don't want to give people Kushlash, Luke Flash.
That's awesome.
Yeah, no, but it's also importantly, we feel like you have something to say is a key to it.
Fair enough. Yeah. Anyways, Luke's a must follow. Thank you so much for being with us.
Yeah,
it's been
Luke,
a pleasure talking
so
with you.
Hey, Merry Christmas, Luke.
Merry Christmas to you too.
Yeah, Happy New Year. It's and let's make 2020 a successful one. It's gonna be a fun year next year for sure.
Yeah, I think there's a lot of things setting up to make it really exciting and fun to be talking markets with people. So it's a great time to be in our respective businesses.
I'm going to put you on the spot. One last thing, Luke.
Sure.
All right. So give all of our listeners one nugget. Like we always at the end of the show have a pearl of wisdom. Trading wisdom. And we quote some famous quote or something. But obviously we didn't ask you to prepare. So we're putting you on the spot. But do you have a little gift for our listeners? Some kind of little pearl of wisdom that you want to leave them with?
Yeah, I will give them one of my favorites, which is from Arthur Schopenhauer. Okay. And it is, the task is not so much to see what no one yet has seen, but to think what nobody yet has thought about that which everybody sees.
Whoa.
Wow.
That's pretty deep.
That's awesome. I'm glad I asked this question.
Well done, Luke. Well done, buddy.
Merry Christmas, everybody. There you go. Everyone got a present. That was awesome.
Thanks again, Luke.
Hey, thanks for having me on, guys. It was great catching up.
Oh,
Take care. Bye-bye.
Take care, Luke.
Bye-bye.
Okay, Patrick. Last show of the year. It's been great. It's been a great year, Patrick.
Oh, it's been great. I'm loving this, man. To many fun. More successful years of the huddling.
I completely agree, and nobody tell my wife that it's basically just an excuse to drink beer on a Friday night with my pal.
I will never tell.
Never tell. Patrick, where can they find you on Twitter?
You can find me at Patrick Ceresno, and you can find my website at bigpicturetrading.com.
And I'm at Kevin Muir, M-U-I-R, and you can check out my blog at themacrotourist.com. This is the point where our main show ends, but for those who want more Market Huddle, stick around for the after hours portion. And just a reminder that
there is no after hours.
I think there is.
Well, okay. There's our little beer rating. Okay, anyway, go on. Let's go on.
And there's a after hours, Patrick. It might not be extended. Anyways, just a reminder that the Market Huddle is available on iTunes, Android Play, Podbean, Spotify, and YouTube. Thanks for listening. We appreciate you taking the time to join us and look forward to hopefully speaking again next week and next year. I'm Kevin Muir.
And I'm Patrick Ceresna. Have a great weekend, everyone.
Here.
Right,
Luke knows. Luke knows the drill. I was worried he'd actually gone, but Luke knows the drill. I'm sorry. No problem. We'll edit here. Luke, you have to leave your browser open until Lena. I guess because you do macro voices, you know all about this, right?
Yeah. I'm sitting right here. I'm just glad you weren't going like, God, what a fucking asshole that guy is.
No. Are you kidding, Luke? We love you. We love you.
I think a lot of people on Twitter, when you ask me that question, I think a lot of people think I'm more intense than I am. I mean, I am an intense guy, but I think people would be shocked if they heard me drop the.
I think people on Twitter are idiots. Like the majority of people are so bent on being right. And like as traders, you know what it's like. If you're right 60% of the time, you're doing awesome.
That's right.
I think people should just relax about all this shit and just kind of realize that just because you have a market view, like I wrote this whole piece about like we should be happy when someone disagrees with us because it's someone to trade against. If we all agreed, there'd be nobody to trade with. There'd be no opportunity.
I follow a lot of people that I don't agree with at all. And quite frankly, it's like how my mind works. Like I spend my days not trying to find stuff that I agree with, but I'm trying to find stuff that is going to prove me wrong. Because to me, that's my big fear, my big risk. It's how I'm going to, so I always try to always argue the counter side of it.
Yeah. I always laugh and I say, if you can't argue the other guy's opinion, you don't know it well enough.
That's a great point. That's absolutely true. It's absolutely true.
Well, like, because I could do it. Like, Patrick's got this idiot idea that bonds are going to go down, and I can sit there and go up in price, down in yield, and I could argue it. I could tell you it. Like, I know exactly why they think this.
Oh God!
And then I'd be like, okay, like if you said go ahead, argue Patrick's point, I could give it to you.
Right.
I won't because it's ridiculous. But anyways, like I still understand it.
No, that's absolutely. I mean, that was always our big thing, right? And I think some of that, the discipline or the process for me comes from when we were, I was at Midwest Research and Cleveland Research, right? With individual single stocks, it's always like, what do we know that nobody else knows? And that was the business we were in. There were lots of times that we knew stuff that nobody else knew because we did these channel checks and we built the mosaic and. It was a great business. And so I sort of take those same approaches.
I can't believe we're not recording this. This would have been freaking awesome to keep in the show. It's anyway.
Yeah, you just try to, it's what do I know that nobody else knows? And that's when I get excited. I was like, they don't know this.
Yeah, exactly.
Right.
And so therefore, if you think about it, like I write pieces and I'll tell you when I get feedback that is really, really against me, I double my position because I know that if people are spending the time to go tell me this, they're all in. Like, if like the lukewarm stuff, I don't bother with. I'm like, if I get some positives, some negatives, but if I get like a whole bunch of people sending me, you're wrong, I'm like, that's awesome. And I fade it.
I know that I had someone do that to me earlier this year. It was like a proactive email, and it was like, I can't believe somebody in your seat could be so stupid to think that, like, it was like a punch right in the face, right? It was hilarious. But it was like, I said, okay, well, it was, and I think it was about, bonds when they were like, 10 years, like 1.4 in the US, right? It was like, like he's feeling that good that he just
exactly.
And punch.
So Bill Fleckenstein talks about this all the time. He talks about his hate-o-meter. And he says when the hate-o-meter, when he gets so much hate mail, he knows it's time. Like that's what he does. Like I think it's awesome.
And it goes the other way. Like one of my big regrets in the last, I bought gold and I never owned gold until 2008. And I bought it and people thought it was stupid and nuts and it was a panic trade. And, it actually really was. And it was just this dynamic I talked about before. But got to like fall of 2011 and like everyone that had told me I was stupid was like high-fiving me and shit. And I look back and I go, I should have laid it off. I should and just, because I actually said it to my wife at the time. I said, I know it's going to go down, but I just, it's a longer term position, but it in hindsight, it didn't take this much longer.
Luke, you know what? Kev took your wisdom there. He was long the pound sterling into into the election. And he went to do a victory lap, and he WhatsApped me. And the moment he realized he was doing a victory lap, he goes, "I just halved my position." Like he just basically
I realized that I was feeling smug, and I was rubbing it in. I was like, first of all, whenever you tempt the market gods and you start doing that, you're just begging for a bruising. So I was like. And then I thought, I'm feeling smug. I must be wrong. And so therefore I halved it. And I wish I had sold it all. And then I sold all the rest the other day. Anyways, Luke, we'll let you go because it's Christmas time. You got to get caught up. And Luke, one last thing before you go. Yeah. I think Nina actually taped this. Are you okay with putting this part into the show as well?
Yeah, I think that's fine.
Did you say anything?
Yeah. I don't think you said anything bad.
I didn't think I said anything. I mean, I dropped
keep it in.
No, don't worry. Luke, buddy, we had this guy come on, this Chicago guy come on, Jimmy Jude. He starts it off. He says, "Do you mind if I swear?" We go, "No, we like swears. Let's see, it makes kind of spices it up and stuff like that." He proceeded, every third word was fuck.
and it was so funny. It's one of our more popular episodes.
Are you kidding? It was our best episode ever. Like, it was awesome. Jimmy Jude is the best, but it was just hilarious. I was like, oh my God, what has he done? He just kept going on. So don't worry. One swear is no big deal at all.
Perfect. Yeah, okay. No, I thought it flowed well. So sure, why not?
Okay, terrific. Awesome. Thanks again, Luke.
Hey,
take care,
Merry
buddy.
Christmas, bud.
Right,
Merry Christmas.
Yeah, thanks again for having me on, guys.
Yeah, cheers.
Bye-bye.
Take care. Bye-bye.
And Merry Christmas.
No,
Patrick, it's actually the 27th.
Yeah, so
Happy New Year, bud.
Happy New Year.
Take care, everyone.
That's funny.
Lena, hop on.
Yeah, that's funny. I'm saying Merry Christmas, everyone, but we're airing this actually after Christmas.
I know.
I mean, if you want, we can release it on Christmas.
No, we're going to stick to the schedule. The 27th it is.
Okay.
And right. You know what? Patrick did not follow the script. He did not do his Ron Burgundy. He fell down. For those who don't know, Patrick is a little bit like Ron Burgundy.
Have a great weekend.
So Ron Burgundy in the Anchorman actually will go, and if someone puts something in there, we'll actually read it out loud.
What did you write that I didn't read?
You made up stuff, which is you went off script.
Kevin, but you should have known better.
Ron Burgundy would never do that. Ron Burgundy would never do that.
But Kevin, you should have known better. You've said many times on the show that Patrick doesn't read.
That's right. Okay, let's do this beer.
I just spit my beer.
The Barking Squirrel, which I love the name. I love the logo. I like the whole aesthetic.
Don't tell, you sound like you're about to shit on the beer.
No, it was fine. I'm going to give it a middle of the road 7.9.
Oh, it's still pretty high.
Yeah. What do you think, Lena?
I actually would give it a 7.4.
Oh, Lena doesn't like it as much. Patrick.
What did I give Granville Island last week?
Too low is all I know.
And what was it, Lena? Do you remember?
Oh, I don't remember.
Was it?
It was too low.
Was it 8.9?
It wasn't an 11. If something like that. Well, you like this better than Granville Island?
I'm giving this a 9.0.
Oh God, that's
Get out
terrible.
of here.
Yeah, Lena,
I'm using the Granville Island as the new kind of benchmark because it was a good beer. I would buy this before the other one. I'm giving this a 9.0.
Okay. Oh, well. Anyway, so be it. Okay. So we're going to get going. So what do you guys got planned for the new year? Lena, what do you got planned?
I actually don't have any plans for New Year's yet.
Oh, my God.
My
you're
friends
getting
and I are
old.
still trying to figure it out. I'm almost tempted to just stay home.
Oh, no. You're getting old.
You are getting old, Lena.
It wouldn't be my first time either.
Oh, that's not a 20-something, Lena. That's the what is a mature millennial?
Elder millennial.
An elder millennial.
Yes.
Elder millennial, which is basically Lena.
Well, if we lived somewhere warm, then there's plenty of things to do. But for New Year's, it's oh, I want to go watch the fireworks. Oh no, it's too cold outside. Or I want to go skating or something. It's too many people, too much snow, too cold, too windy. Why not just stay in my pajamas and stay home?
Well, that just sounds awesome, Lena. I completely think that's great. Netflix and a beer or two in bed by 10:30.
Yeah,
that's basically my New Year's.
Oh.
Yeah, exactly. It wouldn't be
Patrick,
my first time.
we're not all as cool as you are, buddy.
I'm old on the outside, but young at heart.
You are. I would agree.
I try to live the youth.
One
I wish
second.
I had.
I have to, you know what? It's okay. I'll do it another week. Don't worry. But I had something to do, but I got to fix it later. Don't worry about it. Ignore me.
All right.
We don't need to edit that out because I make a fool of myself enough. But anyways, have a happy New Year, everybody.
Happy New Year, everyone! It's and let's get a good rolling start to the new year. We got some great guests and we'll have a good show. It's gonna be great.
Yeah.
I'm looking forward to it.
I'm looking forward to it to you guys too, and it's been a pleasure being both like co-workers and friends with both of you, and I've really enjoyed my year with you.
Ditto.
All right. Cheers, everyone. Happy holidays,
Bye-bye.
everyone.
Bye-bye.
Cheers.